Hey everyone! In today's video, we're diving into a powerful trading strategy, the Supertrend indicator, combined with filters for trend and ranging market conditions. We'll code the strategy in Python, optimize it using Freqtrade, and run thorough backtests to see how it performs across different market environments. Let's jump right in. Before we dive into the strategy, let's first break down the key indicators we'll be using in this strategy. Supertrend indicator. The Supertrend is a widely used trend-following indicator that provides straightforward signals based on price movement and volatility. It overlays a dynamic line on the price chart that changes direction based on the trend. At its core, Supertrend uses the average true range to calculate its position and adjust for market volatility. This makes it more responsive to real-time price action compared to traditional moving averages. When the price closes above the Supertrend line, it indicates a potential uptrend, signaling buy opportunities. Conversely, when the price falls below the Supertrend line, it suggests a potential downtrend, signaling sell opportunities. What makes the Supertrend especially useful is that it not only follows the trend, but also acts as a trailing stop loss, helping manage risk as the price moves. We can't rely on the Supertrend alone. That's why we'll be using the exponential moving average as our trend filter. It acts as a dynamic support or resistance level, helping us stay on the right side of the market. When the price is above the 100 EMA, we consider the market to be in an uptrend and will only look for long positions. When the price is below, it signals a downtrend and will only take short positions. By combining the EMA with the Supertrend, we align our trades with the dominant trend and avoid going against market momentum. Next, we also want to avoid trading in a ranging market, because this strategy works best during strong trends. To filter out sideways markets, we'll use two tools, ATR and ADX. In a ranging market, prices move sideways in a tight range. This means low volatility. To measure volatility, we'll use the ATR on a higher time frame. Even though we're trading on the 1-hour chart, we'll check ATR from the 4-hour chart for a bigger picture. When ATR is low, the market is likely quiet and ranging. When ATR is rising, it may signal that a new trend or breakout is starting. Instead of using a fixed number, we'll use an ATR quantile, like the 40th percentile, as a dynamic threshold. This way, our strategy adapts to changing market conditions. In short, we'll only enter trades when volatility is higher than usual compared to recent candles, helping us avoid choppy sideways markets. To make sure there's a strong trend, we also use the ADX, Average Directional Index. But instead of using a fixed value, we apply a dynamic ADX threshold. When ATR is high, we require a higher ADX to confirm a strong trend. When ATR is low, we allow a lower ADX threshold. This way, the ADX adjusts based on current market volatility. By combining dynamic ATR and ADX filters, we avoid entering trades during weak or ranging markets. Now that we've got our indicators in place, let's talk about how we actually analyze trends and generate trading signals. To enter a long trade, we need all of the following conditions to be true. First, the closing price must be above the Supertrend line. This tells us the market is in an upward move. Second, the price should also be above the 100-period EMA, which confirms we're in a broader uptrend. Third, we check if the ATR on the higher time frame, in this case, the 4-hour chart, is above the dynamic ATR threshold. This helps us avoid low volatility, ranging conditions. And finally, we make sure the ADX is above the dynamic ADX threshold, which confirms that the trend is strong enough. Once all these conditions are met, we enter a long position on the next candle. For exiting the trade, we use the Supertrend line as a trailing stop. If the price closes below the Supertrend, we exit the trade and lock in our profits. In this case, everything lined up perfectly. And as you can see, it turned out to be a successful trade. Now let's take a look at short trades, where we profit from downward trends. To enter a short position, we flip our conditions. First, the closing price must be below the Supertrend line. That tells us the market is in a bearish phase. Second, The price should also be below the 100-period EMA, confirming a broader downtrend. Third, we check that the ATR on the higher time frame is above the dynamic ATR threshold to make sure we're not entering during a quiet, ranging market. And finally, the ADX needs to be above the dynamic ADX threshold, so we know the trend has strength. Once all of these are met, we enter a short trade on the next candle. To exit, we do the same thing. We use the Supertrend line as a trailing stop. If the price closes above the Supertrend, we close the trade. Now that we've covered the strategy in detail, let's dive into the backtesting results and see how it actually performs. We've optimized this strategy using Freqtrade, a powerful open-source crypto trading bot built in Python. If you're curious to learn more or want to build your own strategy, check out the Freqtrade course, linked in the description below. For this backtest, we used GRT perpetual futures on a 1-hour time frame, covering the past 1 year of data with our optimized settings. And the results? We achieved a total profit of plus 212%. That's impressive, especially considering that during the same period, the market itself dropped by 51%. The maximum drawdown, or the biggest drop during the strategy, was just 12%, which shows the strategy managed risk really well. Now, let's look at the visual performance summary. As you can see on the chart, the equity curve is consistently trending upward, which means the strategy kept generating profit with minimal dips along the way. This shows its ability to adapt across different market conditions. The optimization process used 8 months of in-sample data, fine-tuning parameters to get the best results. Then, we tested it on 4 months of out-of-sample data the bot has never seen, to make sure it still performs well and isn't just overfitting to the past. So overall, the results are solid: strong returns, limited risk, and good consistency. If you'd like to download the Freqtrade strategy file and try it out for yourself, make sure to check the link in the description below. I've also included a pair-optimized version, which lets you trade multiple pairs in a single setup, each with its own fine-tuned parameters for better performance. And yes, we're using leverage strategically to boost profits while managing risk carefully. If you found this video helpful, go ahead and smash that subscribe button, turn on notifications, and share it with your trading friends. Thanks so much for watching, and I'll catch you in the next one.